The US-Iran conflict will have a huge ripple effect on South Africa's economy, with consumers expected to bear the brunt of higher fuel prices in the month of April. Apart from the budget announcement of the collective increase of 21 cents per litre for the general fuel levy, the carbon fuel levy and the road accident fund levy, the first fuel price recovery data from the Central Energy Fund following the United States attack on Iran this past weekend shows a move economist Yanni Rousseau says would be inevitable.
On the one hand, of course, we have a much higher oil price and the rand exchange rate against the dollar depreciated, and that those two taken together does not bode well for the fuel prices in South Africa. Both petrol and diesel prices expected to increase in April if this tendency of a higher oil price and a weaker rand continues through the month of March. But at the same time, we should remember that we are here at the south of Africa, and logistics lines to South Africa, to our region, very important. And these logistics lines have now been interrupted in Doha and in Dubai. So as a result of that, some of the items we have to import to South Africa will either be delayed or not available at all, which might also lead to price increases, and all this taken together is not positive.
One of the biggest and most immediate casualties of the escalation is the price of oil, which surged to $82 a barrel at the start of the week, compared to the average of $69 a barrel in February. Portfolio manager at Rand Suisse, Gary Boyson, says also concerning is the news of Tehran's closure of the Strait of Hormuz, a vital shipping lane for oil.
Brent crude oil prices have spiked to just under $85 a barrel today. This is as the Straits of Hormuz, which handle around a fifth of global oil supply, remain closed. There's been some indication that the US will escort ships through, but traders remain skeptical around the success of this model. The mechanism through which the wider conflict that we're seeing in the Middle East will translate to the global economy is certainly through the oil price. This is going to, of course, boost inflation and make the cost of goods and services a lot more expensive. But if we take the time value of money and we look at oil prices historically and adjust for inflation, it's very possible, very conceivable to see oil prices at sustained higher levels. This, of course, is going to have significant ramifications on South Africa. We are a net oil importer.
Along with oil and natural gas, prices of petroleum products such as diesel have also spiked, with economist Annabelle Bishop warning that this could fuel a wave of inflation worldwide if prolonged.
Globally, of course, the jump in the oil price and will depend very much on how long it persists. For international fuel price effects, the US has communicated that it will continue to strike Iran, but of course there's also uncertainty, and that's impacted global financial markets, and there's likely to be volatility.
The impact of the Iran war on diesel prices is expected to be worse, with the Central Energy Fund data showing an under-recovery of R2.35 per litre. The upcoming month will also see tariff adjustments for Eskom direct customers that comes into effect on the 1st of April 2026. Katlego Logodi, SABC News in Johannesburg.